What is going on, guys? It is Matt with Trading with Matt, and today I'm going to break down the simplest and most profitable 15-minute strategy for you on the charts. This strategy is not only going to help you become a profitable trader, but also help you see the charts clearer and understand price action just a little better. So let's start with our chart here. We have the 15-minute chart here. What we're going to do is what we always do. We're going to start with our support and our resistance zones. So we're going to build our support there. I'll write that out. We've got our support. Next, we're going to find our resistance zone, which is right about up here. We're going to build our resistance zone, and we're going to write that out here for you, just so for simplicity and we can be on the same page in terms of what we're looking at, make it a little bit easier. So we have our support and our resistance zone made. There are two key indicators that we need to use here on the 15-minute time frame. The first one is going to be the EMA ribbon. So the EMA ribbon is comprised of days 20 through 50 in increments of 5. So we have the 20-day, the 25-day, the 30-day, the 35-day, the 40-day, the 45-day, and the 50-day EMA. What that's going to do is help us see this EMA ribbon that essentially works as a miniature support and resistance zone for us. This is a key indicator because candle closures above or below the EMA ribbon are going to signify that we are changing momentum on the charts. In terms of the style, I do different colors to show the EMA ribbon. You can use whatever you'd like. However, I suggest using the smallest time frame, the 25-day, and the highest time frame, the 50-day, in different colors. That way you can see the actual EMA ribbon flip. So if the yellow goes underneath the white, I now know the ribbon has completely flipped, and the chances are that momentum on the charts has either changed to the downside or to the upside. It's important to note that the source you want to use is close. You always want to use close. That'll do the day close as the EMA ribbon. Again, style is different colors, and visibility you can put on all time frames. That's what I suggest. The second thing you'll need to do is get the fair value gap. What I use is FVG/IFVG, and it's called nephew_Sam_. This is a great fair value gap indicator. It does all the work for you so you don't have to. In terms of inputs, you just want it on whatever time frames you use. So time frame 1 is on the chart, and it's on 15 minutes, 1 hour, 4 hours, and the day. You want to hide fair value gaps lower than enabled time frames, and you want to show the fair value gap, and you want to show the inverse fair value gap as well. You want to make sure that's on close as well. Visibility, you want to put it on all of the time frames that you trade on. For this one specifically, we just need the minutes, in this case, the 15-minute. So what we're looking for here on this chart is a break above or below the EMA ribbon. Now, if we take a look at the next couple candles, we actually had 3 or 4 15-minute candles close above the EMA ribbon. This is when we're going to start looking for buys. So after this fourth candle close, or this third candle close, we would look to get in longs. Now, there's a couple reasons why. We're going to use the first candle as the example. And we're going to put our stop loss at the bottom of the support. And we're going to put our take profit at the next key level, which is right up here. So it's very important to note that we had a full candle closure above the EMA ribbon right there. There was our full candle closure. The next thing that we had was a fair value gap created, this FVG right here. And that is the Nephew Sam fair value gap indicator. When those two align, the full candle closure above the EMA ribbon and the fair value gap is created, we have created a very powerful indication letting us know that the chart may break out. Now, we had a breakout candle right here, but moving forward, you're going to have another fair value gap creating, therefore indicating the chart is continuing toward the upside. And a few candles later, a third fair value gap created, also indicating that the chart is moving toward the upside. Now, if we were to get in this trade right when we had the original candle, we would have held at about our entry for about an hour, which is fine. Trades aren't typically, go right away, but we would have held for about an hour. And after the hour, we would have been in profit once it broke through the resistance zone, about 13 pips. And at the end, you'd be at about 30 pips. Now, typically with this strategy, I aim for 15 to 20 pips. That's where I noticed it to be the most accurate, and I've had the most success. So the first key zone that you're going to have here as a take profit is going to be right above the resistance zone. That's going to be take profit 1. So any entrance over here, that's going to be about 10 to 15 pips. Our second is going to be right up here at the next key zone, which is going to be a little bit more, closer to 28, 29 pips. This strategy works extremely well on the 15-minute time frame. Now you need to remember that you need to have these 3 confirmations. A candle closure above or below the EMA ribbon. We had that right here. The next thing that you want to have is a fair value gap created. We've created one right here. If you want, you can even wait for a second fair value gap to be created like we did right here. After that, you are going to take a long or a short based on the chart. Based on this chart, we're going to take longs. And if you got in with the first candle closure above the EMA ribbon and the first fair value gap formed, you'd be at 16 pips in profit for TP1 and 28 pips profit for TP2. Now, if you learned something today, I appreciate you watching. Make sure you subscribe. Trading with Matt. We go live Sunday through Thursday at 7 p.m. for the Asian session daily. Hope you guys learned something. Make sure you subscribe.